China is a major buyer of Venezuelan crude. If Trump in the short term succeeds in inhibiting Venezuelan supplies from getting into Chinese hands, well, China is going to have to look elsewhere for its crude, and that potentially is going to put a little bit of upward pressure in the short term. I mean, China currently depends on Venezuela for something like 4% of its total crude consumption.
During that hour-long press conference yesterday, President Trump repeatedly stated that the priority for the United States after overthrowing Nicolas Maduro was to move in American oil companies and start extraction in Venezuela. It has the world's largest oil reserves there. About 17% of the world's oil reserves are in Venezuela, but its output is low due to decaying infrastructure, mismanagement and sanctions. Ian King is the Times business columnist and market commentator. There's a lot to this, Ian, isn't there? There's different types of oil. There are different reasons for this. Just paint a picture for us of what's at stake.
Good morning. Yes, that's right. I mean, the kind of oil that Venezuela produces is essentially heavy crude, which is the kind of stuff, incidentally, that US refineries in places like Texas and Louisiana are set up to turn into products such as gasoline. Compare that with here in the UK, where obviously the main benchmark is Brent crude. Obviously, the UK no longer a major global oil producer, but Brent crude is sort of known as light sweet crude, essentially. So the kind of crude that comes out of Venezuela is, as I say, heavy crude. It's of the kind of crude that is produced in Saudi Arabia. But a very crucial point you make there, Venezuela is sitting on some 303 billion barrels worth of reserves, 17% of global output. Put that into context, Saudi Arabia, which we obviously assume is a massive player in global oil markets, I mean, they have something like 260 billion barrels worth of proven reserves. Iran, 200 billion. So you can see the potential there is gigantic if some of this Venezuelan crude can be accessed, but it's going to come at a cost.
Certainly is, and I wonder what that cost actually is when it comes to the oil reserves, because is America ready, do you think, to go in and to get that oil, to market it and to help Venezuela, or use Venezuela, I suppose? We're being told from Trump's perspective that they are in control of Venezuela. Goodness knows what the actual truth of that is. But in terms of the oil reserves being underexploited, just tell us how difficult it is to actually fix that, the task ahead, essentially.
Absolutely. I mean, this was a huge producer, Venezuela. I mean, in 1999, when Hugo Chavez, Nicolas Maduro's predecessor, seized power, I mean, Venezuela was producing upwards of 3 million barrels a day. It's now down to around 900,000, which, as you said in the introduction, is down to mismanagement, corruption, poor investment by the nationalized Venezuelan oil producer. But the problem is, for a lot of the Americans, only Chevron there of the US majors is actually still in Venezuela. I think they produce something like 500,000, or less than that, barrels per day. But the problem is a lot of the majors, the likes of ExxonMobil, they are still scolded. They're still sore from their previous experiences in Venezuela. Chavez seized the US company's assets back in 2007. And the likes of ExxonMobil, I mean, it's been ruled by international courts that they are owed money. They're owed compensation by Venezuela for that. The Venezuelans haven't got round to paying them that yet. So if you're ExxonMobil, you'd think very long and hard about whether you'd want to go into Venezuela again. And it's going to cost billions and billions of dollars to get production up to snuff again. So there's an awful lot of hurdles to jump before Venezuela can become a major exporter of crude again.
Clearly a lot of risk there. What is the immediate impact of all of this instability and the promise of oil being a major part of this? What market effect do you expect tomorrow when the markets open?
Well, this is a really interesting point, because right now the world is awash with oil. We had last year was the worst performance by the oil price for 5 years. Brent crude fell off by some 19% last year. Why was that? Well, because there's an excess of supply over demand right now. America, the world's biggest producer by a mile, thanks to thanks to fracking, shale oil. America is producing something like 13.8 million barrels a day. As I say, that's significantly ahead of where Venezuela is just now. So the world is awash with crude. And that is expected to be the case right now. The International Energy Agency, which is the sort of main arbiter of these things, estimates that over the course of 2026, there's going to be a daily surplus of oil, i.e. supply outstripping demand by around about sort of 3.8 million barrels a day. That's a really, really significant overhang. It kind of explains why the crude price has been so low in recent times. Now, ironically, the OPEC countries, the OPEC cartel, they still produce around 2/5 of the world's crude. They're meeting today to decide what they do. So they've got a bit of a question on their hands. Do they kind of introduce production cuts? Well, there's not a lot of appetite for that right now. But it means that essentially you're seeing Brent crude. I mean, it closed on Friday evening at $60.75 a barrel. You might see the crude price tick up a couple of dollars early on tomorrow morning. But as I say, this isn't shocking as it may sound, given what I've said about the size of Venezuela's reserves. I don't think it's really going to move the needle, particularly in the short term, given that excess of supply over demand. Longer term, very, very interesting there. If you really do start to see Venezuelan output motoring and a lot of those exports hitting the market, well, potentially that has the impact longer term of bearing down on oil prices, which is obviously what Donald Trump wants to see. The other dimension of this, which we haven't yet discussed, is China. Now, China is a major buyer of Venezuelan crude. If Trump in the short term succeeds in inhibiting Venezuelan supplies from getting into Chinese hands, well, China is going to have to look elsewhere for its crude, and that potentially is going to put a little bit of upward pressure in the short term. I mean, China currently depends on Venezuela for something like 4% of its total crude consumption. So that is worth keeping an eye on as well.
Ian, it's really interesting about that. Where else would China go for their oil, and what effect might that have, do you think?
Well, potentially.
In that hypothetical scenario, obviously.
It is a hypothetical scenario, yeah. But I mean, obviously, the suspicion is that a lot of Russian crude is finding its way into Chinese hands. Now, we know India is the main buyer of Russian crude right now, but one would suspect that China would seek to try and get its hands on some of that in the short term. Don't forget, China is also undergoing a massive decarbonisation process of its own. We commonly think of China as being very, very into sort of polluting fossil fuels, coal-fired power stations and the like, but they're building more wind farms than the rest of the world by some distance. So China is going along this sort of decarbonisation journey itself. So over time, they're going to be less dependent on crude as well.
Thank you, Ian King there, Times business columnist and markets commentator. Really interesting what he's saying there. We will watch the markets with interest.